Here's how to make $1,000 in a month trading Forex. The main reason why people trade Forex is so that they can make some money. In this video, I'm going to be showing you how you can make $1,000 in a month. I'll go over the strategies, the tools, and the mindset you need to achieve this goal in 2025. So even if you're a beginner, you're going to get a lot of value from this video. So make sure you pay attention and let's get started. How to make $1,000 in a month trading. So I'm going to be breaking this down for you guys. Let's get this started. So first of all, I'm going to be showing you a step-by-step guide on how to make your $10,000 in a month. Whether you're a beginner or you're an advanced trader, this video is going to enlighten you and it's going to educate you on making $1,000 in a month, right? So make sure you like and subscribe before we get into it. Pause the video, make sure you like and subscribe. I see that most of you are not subscribed to the channel, so those of you that are not subscribed, make sure you subscribe and let's get this started. So firstly, to make $1,000 in a month, is it realistic? Is it unrealistic? What do you need to make $1,000 in a month? That's a goal that most people want to attain. At least I know if you're in Nigeria, $1,000 in a month is a lot of money. That's about like 1.5 million naira, right? If you're in other countries, that's also a large amount of money to be making in a month, right? So I'm going to be showing you the tools that you need to make $1,000 in a month. Now, the first step is you need the right tools in order to do this successfully, right? If you have the wrong tools, it's not going to work out for you. So the first thing you need to get right before you can go into more in-depth things, more in-depth steps. The first thing, basics, is you need to have the right tools for success. Now, to consistently make money in Forex, you need the right tools, right? To consistently make money trading Forex, you need the right tools that will make things easier, make things more fluent, so that you don't just start making mistakes and start doing all manner of stuff, right? So I've been trading Forex for 4 to 5 years now. So over the years, I've seen a lot of things. I've seen people make money, blow accounts. I've blown a lot of accounts. I've made a lot of money from trading. So I can show you the right steps on how to make this happen for you that are new to trading and for those of you that are struggling, trying to make some money out of this market, because that's the point of trading in the first place, right? So here are the two main things you need to have. The first thing you need to have is you need to have a good broker, right? Over the years, I've gone through different brokers. I'm going to show you the best one that you can use to trade Forex, because the thing is, if you don't have a good broker, then your money is at risk, right? If you're with a broker that's not good, then your money is at risk, right? So choosing the right broker is crucial. It's crucial because it affects your spreads, execution speed, and risk management. Spread is very, very important, because if you have a broker with a very large spread, right, you're gonna end up hitting your stop loss without price actually getting to that exact stop loss, right? So most of you know what spread is. If you have a tight spread, then your entries are going to be very tight. And because of your entries is tight, your risk reward is going to be high. And because your risk reward is high, you're going to be more profitable. You're going to make more money. But if you have high spreads on a broker, then that's not a good thing. Now, execution speed. You need fast execution. Like the moment you press that button, you need to enter that trade immediately, because the market is not going to wait for you. One thing that usually happens in the market is there's some trades that you enter. There's some trades that you enter, and once you enter the trade, let's say you enter the trade here, the next candle that opens just starts going maybe in your direction, start going in your direction like that, right? And then you find out that if there's any delay in entering that trade, instead of entering the trade at this point here, you end up entering the trade like down here because of slow execution. So you need execution speed. The moment you enter, you need to be in that trade instantly. Now, the difference between a profitable trader and an unprofitable trader is profitable traders focus on execution, right? You need to execute without mistakes. You need to execute flawlessly, right? A profitable trader has to execute flawlessly, because any mistake you make in execution, maybe you're making mistakes in your lot size or your entries or anything like that, it's going to mess you up. It's going to affect your math. It's going to affect your trading and your profits. It's going to eat up your profits, and you don't want that, right? And then risk management. You need to be able to use proper risk management. You need to calculate your lot size, calculate your pips, calculate your risk reward. Everything needs to be calculated, right? If you're just trading without these three things in check, then just forget about even making money in these markets. The broker I'm going to recommend for you to use is Okta. Okta is one of the best brokers out there. I've been using them for years. When I first started trading Forex, this was the broker that I started using about like 4 or 5 years ago. Okta. So why should you use Okta? Okta has low spreads, right? So your trades are going to be more profitable, like I explained previously, that if you have tight spreads, then you're going to make more money because of if the spreads are high, it's going to eat up your profits. So if the spreads are tight, if you have very low spreads, then you're going to make a lot more money because the profits are not going to be eaten up by the spread. Now you need fast execution, like I explained, prevent slippage, which can eat into your profits, like I explained earlier. Risk management tools helps you protect your accounts. Now Okta has uh risk management tools. I'm going to be explaining that later in the video. So you're going to see some risk management tools that's going to help you because I've gotten a lot of questions from you guys telling me that, especially beginners, telling me that they don't know how to calculate the lot size. You're having problems calculating pips, calculating your lot size. How do you calculate all that? I'm going to explain that for you in this video. So now, Okta, why should you use Okta? No commissions. So you keep more of your profits. Most of you know what commissions are. When you place a trade, the broker takes percentage of the commission from your accounts, right? But Okta, there's no commissions, right? Zero commissions. So you don't need to worry about the commissions. Now, another thing I like and love about Okta is 100% deposit bonus. For example, let's say you deposit $100, they're going to give you $100 more as a deposit bonus, and then that's going to equal you having $200 to trade with. So basically, they are doubling your money for you to trade with, right? And that gives you more leverage and the more leverage you have, the more money you can make trading. So there's a 100% deposit bonus, which helps you trade more capital. You know, the way Forex is, the more capital you have, the more money you can make trading. So if you go on their website, another thing you're going to see is they have zero swaps. So what exactly are swaps? Some of you that don't know what swaps are. For example, if you're a swing trader, if you're holding your trade overnight, during that time period where the market closes and opens, that's time period, I think it's like 10 p.m. Nigerian time or 11 p.m. Nigerian time. When the market closes and opens, there's usually a swap fee. There's a swap fee that brokers take from your account, right? That's separate from the normal commissions. Second tool you need to have is a Forex calculator. This is going to help you calculate your lot size, margin, potential profits before entering a trade. It also prevents you from over leveraging and keeps your risk under control. Now I'm going to show you how it works. Now, Okta websites, you're going to see they have tools. That's one thing I like about their websites, about Okta, is they have the tools that are going to help you calculate those lot sizes, calculate those pips, calculate those margin, calculate the profits that you're making. So if you go here to analysis and education, you're going to see they have a trading calculator, profits calculator, pip calculator, and all that thing. So let's go to the profit calculator real quick. So if you click on the profit calculator, it's going to take you to this page. So now you can calculate your pip value, required margin, and trading fees. Now remember, they don't have trading fees, so this is going to be zero. So basically, you select the currency pair that you want to select, that you want to calculate for. That's, for example, Euro USD. Select the currency, if it's USD or Euro. Set the leverage that you have for your account, and then put the lot size that you want to calculate, and then you just click on calculate. For example, let's say you put two lots. So if you put two lots, you're going to see the pip value on your USD. The pip value on your USD is 20. The required margin is 206, and the trading fee is zero because they don't have trading fees. So on the profit calculator, this is where you calculate your profit. For example, you choose your currency pair. Let's say you want to calculate. Let's say you want to enter a trade and you want to calculate how much you're going to make on that trade. You come over here and you select the symbol, which is the currency pair that you want to use. So let's say you use your USD. Select the account currency, then calculate the lot size. So you put here the open price. So for example, let's say you go on the charts here, right, on your USD, and then let's say you want to buy. Let's say you buy at somewhere here, and then let's say your stop loss is here, and then your take profit is around here. Then you want to calculate how much are you going to make on this trade. So basically, double tap on this, double tap on the long position, maybe go to the settings of the long position, and then you're gonna see your entry price. So copy your entry price. So just copy your entry price, copy, and then go to Okta and paste your entry price here, and then your close price, which is your take profits. So go copy your take profits, which is this one, copy the price, and then paste it on the close price here. Right. And then if you bought, change it to buy. If you're selling, change it to sell. So if you're buying, change it to buy, and then put the lot size that you want. If it's one lot, put the one lot and then click on calculate. So when you calculate it, this is the amount you're going to make on that trade, $488, right? $488. And how you can confirm this is if you calculate how many pips this is. Remember, you're using one lot. So if you calculate the pips, you're going to see it's about 448 pips. Yeah, as you can see here, it's about 48 pips. So if you look here, 48 pips. So that's the reason why it's $488 because you're using one lot. All right. One lot for 40 pips or 48 pips is going to give you $488. So you can use this to calculate. If you change this to two lots, it's going to give you times two of that, which is 976. So you can use this to calculate the profit that you're making on a single trade. And you also, if you want to calculate the pips, if you want to calculate the pips, you can go to their pip calculator, right? Go to their pip calculator again, select the currency pair that you want to use and set this to USD, right? And then set the price, set the ask price, and then put the pip amount, put the lot size you want, and then calculate. And then let's say you change this to 20. You can see this is going to change here. Or let's say you set the pip, let's say 10 pips for one lot, right? 10 pips for one lot. That's going to give you $100. So what this means is the pip value means if price moves 10 pips on your USD for one and you use a one lot size, it's going to give you $100. So 40 pips is going to give you $400 like you calculated in the previous calculator. Remember on this page, on the profit calculator, we use one lot, right, for 48 pips and we got $488. So basically it means you can use this if you want to calculate 48 pips. So that's going to give you 48 pips here. It's going to give you $480. So this is going to help you calculate your lot size, calculate your pips, calculate the profits. Make sure you use the profit calculator so that you don't make mistakes when you're placing trades, because that's very important. The worst thing you can do is make a mistake when you're placing a trade and then end up losing more than you're meant to lose, right? Or making less than you're meant to make. Those are common mistakes that people make when trading. And in order to fix that, make sure you use the profit calculator. You can use Octa tools to help you calculate those things. All right. So now, step two, how do you make $1,000 in a month trading Forex? Now, let's break it down realistically, right? No fluff here, no unrealistic stuff here. We're talking about realistically making $1,000 in a month, right? So now, starting capital, how much do you need to make $1,000, right? Because your capital affects how much you can earn. If you have small capital, it's going to be very, 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 very difficult to make $1,000. But if you have a large amount of capital, then it's going to be better for you to make $1,000 in a month or easier. So here's an example. Let's say you have $100 in your account, right? That's your starting capital. You're going to need to risk high to make $1,000 because your starting capital is small, right? Starting with $100, trying to make $1,000 means you have to double your account. You have to make 10x of your account, right? Which is, in order to do that, you need to take high risk trades, right? So this is not recommended. If you have $100, it's not recommended to try to aim for $1,000. Maybe you can aim for maybe doubling your account, making $200, right? So you start small and build up from there till you make $1,000. But it's gonna be better if you have at least $1,000 or more, right? So for example, with $1,000, you can aim to make 10% in a month, right? You can aim to make 10% in a month, which is $100 profits per 10% gain, right? So this one, if you're gonna do this, it's gonna take you some months to make $1,000 to double your account, right? Making 10% per month. So making $100 per month is gonna take you about maybe 7 months, 7 to 8 months to due to compounding. It's gonna take you about 7 to 8 months to make $1,000. But the thing is, if you have something like $5,000, right? Make 20%. 20% of that is gonna give you $1,000, right? So you can see how your account size matters. Anybody that tells you that your account size does not matter, that person is lying to you. Is lying to you. The fact of the matter with Forex is, with trading in general, is you need more money to make more money. So you need bigger capital to make more money. So for example, someone with a $100 account versus someone with a $10,000 account, right? They will do the same thing, take the same trades, right? If they end up making 10% in a month, the person with $100 is gonna make 10% of that is going to be $10. While the person with $10,000 is going to make $1,000 that month, right? So you can see the amount of money you have, your starting capital really matters if you want to make more money. So if you have a small account, it's not impossible, right? It's not impossible, but all you have to do is remain patient and try to build your capital. Build your capital, maybe get a job or get a source of income from somewhere else while you're still trying to build your $100. So your aim is to build this $100, right? Get money from somewhere else or build it with trading, taking trades step by step, which is going to take you some time, a few months. Build it to like $1,000 or maybe $2,000 or $5,000. And then from there, you can start making some consistent income. You can start making $1,000 in a month. You just have to be patient, right? Patience is the key. So the goal is to get consistent gains and not gambling. All right. The goal is to get consistent gains, not gambling. We're not trying to get rich quick. Don't try to get rich. Don't try to get rich quick in trading. It's gonna mess you up. So your goal is to try to make trading your main source of income where you're going to be making money consistently month by month, month after month, month after month, all right? To get a sustained income where you can quit your job and focus on trading and become a full-time Forex trader. To get to that level, it takes time. So now the bigger your account size, the easier it is to make money and the less effort you need to put in without risking a large portion of your account. Right. If you have a small account, you need to risk a large portion of your account to make a significant amount of money. But if you have a lot of money in your account, if you have a bigger account size, it's gonna be better and it's gonna be easier. It's gonna take you less trades and it's gonna take you less risk to make the same amount of money than someone that has a smaller account size. Right. So the second thing that you need to do is pick a trading strategy. If you don't have a trading strategy, then I don't know how you're gonna make that thing. It's not gonna work, right? You need a profitable trading strategy. It's not just any trading strategy. You need a profitable trading strategy. But now, before you can go into trading strategy or the trading strategy that you're gonna use, you need to first of all pick a trading style. Right. So there are different trading styles out there, but there are two solid ones, which is scalping and day trading. Swing trading is also good, but if you have a small account, swing trading is not gonna be good for you because swing trading, you're gonna be holding trades for days and sometimes even weeks, right? So the best for small accounts is scalping and day trading. If you have a small account, you can go for scalping and day trading. Scalping is basically where you're taking quick trades in and out, 5 minutes, 10 minutes, 15 minutes, 30 minutes, 1 hour, right? You're in and out quickly, taking the profit that you can take in a short period of time, in and out of the market. This is best for building or growing small accounts. Day trading is more of the type of trading that I do, where you take a trade and that trade lasts for about 4 to 6 hours. So it takes about a day for the trade to play out, right? It takes about 4 to 6 hours for the trade to play out, right? And then we close the trade at the end of the day. We don't take the trade to the next day. We don't hold trades to the next day. At the end of the day, you close the trade, unless maybe in a different situation where maybe the trade is close to your TP or has gone more than halfway and you just want to hold it till tomorrow for it to hit your TP, but it doesn't go past holding your trade to the next day. It doesn't, like swing trading, for example. Swing trading, you can hold trade for 2 days, 3 days, 4 days, 5 days, 6 days, 1 week, 1 month, right? That's swing trading. And that doesn't work for small accounts because your patience is not going to, the patience you're going to need for that is not going to be worth the amount of money you're going to be making, right? So swing trading is for people that have bigger account size, like maybe $1,000, $2,000, $5,000, $10,000 and above. Swing trading is gonna suit you well. So basically, you just have to pick what suits you, what suits your personality, what suits your style. Pick whatever suits you. Maybe you're a scalper. Maybe that's one that's resonates with you. Maybe it's day trading. Maybe day trading resonates with you. Maybe it's swing trading. Swing trading resonates with you. Pick the one that suits your style. Right? It's not a one size fits all type of thing. You pick whatever suits you because everyone is different. Now, which strategy should you trade? There are thousands of strategies out there. There are thousands and thousands of trading strategies out there, and most of them don't work, right? So to shorten the process for you and to reduce the stress going through different strategies, you can simply use the trading strategy that I used to trade. I've been using it for about 3 years now, and it has been working every year, year after year after year after year. If you go to the very first video that I did on my YouTube, you're gonna see I'm still teaching the same thing that I taught 2 years ago, right? The same strategy, the same thing, maybe with slight improvements and slight variations. All right. So if you want to learn my trading strategy, the name of trading strategy is called BTMM, also known as Beat the Market Maker. right? You can learn the trading strategy by going to my YouTube, check out my YouTube videos, check out my playlist, and then you're gonna learn my trading strategy and the trading strategy that I use to trade. Now, the third thing that you need is proper risk management, like I explained, to protect your capital. So it's not a lot, forex trading is not all about making money, it's also about preserving your money. There's a saying that goes by, it's not about how much money you make, but how much money you keep. Right? How much of your capital can you protect? Because you can make $1,000 today and then tomorrow lose that $1,000. Right? So it's not about how much you're making, it's about how much you can keep, how much money you make that you can keep. Right? So in order to keep and protect your money, protect your capital, you need to use proper risk management. And the best way for beginners is risk 1 to 2% per trade to avoid blowing your accounts. Right? Risk 1 to 2% per trade to avoid blowing your accounts. With this, you need to also use a stop loss. Yeah, you're gonna hear some people out there on the internet saying you don't need to use a stop loss, blah blah blah. Use a stop loss. You just use a stop loss because you don't know what's gonna happen. Maybe a news, an unexpected news could happen that could make the market move with speed and blow your accounts if you don't have a stop loss. All right, so make sure you put a stop loss out there because you're not the one moving the market. You don't know what's gonna happen. All right, so use stop loss orders to prevent huge losses. And Okta risk management tools can help, like I showed you earlier, those position size calculators, profit calculators, PIP calculators. It's going to help you in your risk management too, so that you don't make some common mistakes that's gonna lead you to blowing your accounts and losing money that you're not meant to lose. Also, if you want to get free education, you can go on Okta. Now, if you want to go to their website, go to oktaafrica.net. You can see it up here of oktaafrica.net. To highlight it for you to see. You can see if you look up here, oktaafrica.net, if you want to get to their website. Now, if you go on their website, go to analysis and education, right? On analysis and education, you're gonna see some free tools and free education that you can go over. For example, if you're a beginner, you can go to their beginners forex trading course where they're going to teach you everything you need to know as a beginner to start trading, right? So if you go to their course, you're going to see here how forex trading works, brokers, liquidity, volatility, forex concepts. So it's a video course you can learn. You can go through this course. If you're a complete beginner, don't know how to trade forex, you don't know anything about forex trading, you can go through this course. It's going to teach you everything you need to know on how to trade forex. Also, you can go to their trading education articles here. So if you go to their education here, you can see some other trading strategies and other information on trading. For example, I think if you go down here, you can see how to use other blocks in trading. You can learn that. There's also a week of how to trade the week of. So it's going to help you as a beginner if you want to, if you're confused on some certain knowledge and some certain concepts, you can come over here and read their articles to learn more on trading. Also, you can also use the economic calendar. So this will help you know when news is going to come up. So you can use this. It's like Forex Factory where you're going to see news. Like for example, today we have JPY news by 11:50 p.m. Right? So you can use this to track news events for today. You can also check for tomorrow. You're going to see like tomorrow there's no news. Tomorrow, previous week. So this was last week's news. Let's check for this week. Let's see. Okay, so we have a couple of news this week, some high impact news this week on USD and on CAD, and a few on Euro, just one on Euro. So now, who can realistically achieve this goal? So beginners can start small and grow, but they need proper risk management. Now you can, as a beginner, it's possible, but it's going to take you some time, right? So you just have to be patient, start small, grow your account, understand that trading is a long-term thing. It's not a get rich quick scheme, something that takes time. Now, experienced traders have a better chance of hitting $1,000 consistently. If you've been trading Forex for some time, for maybe 1 year, 2 years, 3 years, and you have a good trading strategy and you know how to use proper risk management, right? And you know how to protect your capital, then hitting $1,000 consistently is going to be easier for you to get there, right? You have a better chance of hitting that goal. But for beginners, it's going to be harder, but you can achieve it by starting small. So from a beginner, you're going to become an experienced trader. It just takes time. All right, so be patient. Forex trading is a skill that takes time to develop. Right, I've been trading for 4 to 5 years now. I didn't just start yesterday. I didn't just wake up and then boom, I know how to trade Forex. It took me time, it took me a lot of discipline, waking up sleepless nights and all those things, right, to get to the point that I am now. And if you want to get to that point, you have to also go through that path, go through that road. If you're not ready for that, then you're not ready to become a Forex trader. That's just the fact about that. Now, if you're serious about trading, check out Okta features. Turn up with Okta. They're one of the best brokers to use. in trading. They've been here for years, for about 12 years now. When I started trading Forex, this was the broker that was the most popular back then. Right. So plus, if you want to sign up using my link, you're gonna get a 100% deposit bonus. So basically, if you deposit $100, you're gonna get $200. If you deposit $1,000, you're gonna get $2,000. So you're gonna get double of your money to trade with, which is gonna give you more leverage and it's gonna help you make more money. So if you want to sign up with Okta, click the link in the description below. So now, if you have any questions, drop a comment, let me know. And don't forget to like and subscribe for more Forex content. And I'll see you guys another time. Follow and like for more. Peace.